All right. Good afternoon, everyone, once again. Uh, this is the first ever webinar that we at KPAC are conducting. It's on decoding ESOP valuations. And let me begin by thanking each and every one of you for the overwhelming response that we have got. In first ever webinar, we have more than 500 registrations, and that's simply amazing. So thank you so much for that. This webinar will be it will be me and Vichitra who will be conducting this webinar. We both are qualified actuaries, and we are practicing in the area of employee benefits. A lot of you are our existing clients and our friends, so you would know that. Both me and Vichitra practice in the area of employee benefits and are working with a large number of organizations and supporting them in their employee benefit valuations. But we go beyond employee benefit valuations as well. We are helping organizations with the design and implementation of such schemes as well as risk management and asset liability management. In terms of the house rules, the videos and audio of all the participants have been kept off. Uh, we will be going through presentation over the next 1 hour. In case you have any questions, please feel free to post that in the Q&A option that is there on your screen, and we'll try to answer that at the end of the presentation. In case we are not able to answer any of the questions during the at the end because of the paucity of time, rest assured we are noting down all the questions and we will come back to you on emails. We obviously have your details. Uh, also, all the participants and the registrations will receive the deck will be presenting during the course of this presentation. With that, I'll begin the presentation now. You all know that compensation and benefit landscape has been emerging. Of late, you see, some of the old kind of plans like long-term incentive plans. They've sort of fashioned out, and we are seeing emergence of these new age compensation plans such as ESOP, stock appreciation rights, phantom stocks, and that's also resulted in our business composition changing. We are seeing a lot of clients requesting us to do ESOP valuations for them or valuation of such plans. Now, at a very conceptual level, it's extremely simple. All you need to do is determine the fair value of the options that are granted and recognize the same as expense over the vesting period. But within this simplicity are the steps which can get quite complicated. And we have seen organizations struggle with quite a few of them. Some of the areas where we have seen organizations struggle include the choice of right valuation models, management of data, the choice of assumptions, and of course, disclosures. We'll be covering all of this as a part of this presentation over the next 1 hour. Now, one of the areas where we have also seen organizations to struggle is the expense charge coming out of these schemes. A lot of times, clients reach out to us and say, Khushwant, how can we best manage this charge? Or how can we best reduce this charge? And to be honest, once you have given a grant, there's not much you can do about it. So we keep telling them that if your main concern around ESOPs is the charge that is coming to the P&L, it is very important that you engage at the time of grant. We believe that it's very important to get the mathematics right when giving ESOPs, and if you get that right, the charge will obviously fall in line. When I say get the mathematics right, I mean that when you're giving the grant, the mathematics should be exciting for employees in the sense that they should feel excited by the grant given to them. At the same time, the overall charge as well as the pattern of charge, and we'll talk about it, that is likely to emerge should be acceptable to the company, and of course, the dilution should be acceptable to the shareholders. So if you get all the three components right, uh, your charge and later on the consequences of the scheme are something that are acceptable to all. But if you have done a grant and then you believe or you want the charges to vary, there's not much that you can do about it. But whatever you can do to better control these expenses, we'll try to cover as a part of this presentation. Now, I was going through the list of participants, and I must say that we have a lot of senior finance professionals and HR professionals that are attending this presentation, this webinar. And because we have 1 hour and there can be a lot of areas to cover in this, what we'll try to do is we'll try to strike a fine balance between keeping it high level so that you as finance professionals or as HR professionals know how to control the outcomes of ESOP valuations vis-a-vis becoming going into the technicalities. So I hope the next 1 hour is an enjoyable experience for you all.